How will that widely predicted 1/4 percentage point hike up to 3.35% hit the hip pocket of people with mortgages?
Okay, so for someone who had a $500,000 loan at the start of the hikes, Madeline, that's going to see a $76 increase into their monthly repayment. But of course, we've had 8 hikes before that, so in total, their repayments will have gone up by $908. And then, of course, larger loans, more pain, so $1 million debt, they're looking at a total increase of $152 in today alone, but $1,816 extra they now have to pay on their mortgage compared to what they were paying in May, month after month after month. These are big rises and they are finally starting to bite. We are starting to see some of that data come good. Retail sales now is finally down in the month of December. That will be great news for the RBA. They've also said that inflation has now peaked. At least in 2023, we'll be going in the right direction.
Okay, just back to people with mortgages though. I mean, those numbers you gave there are sort of theoretical. Most people won't have been on purely variable rates for that. But we are going to see nearly 1 million people coming off fixed rate mortgages before the end of the year, and they certainly will be in for a shock.
Oh, an amazing shock, because the last time they looked at the home loan market, probably, it was entirely different. Look, the RBA thinks that there's about 800 to 900,000 mortgages that are coming off this fixed rates cliff in 2023. If someone fixed in May of 2021 with a Big Four bank, they will be on a fixed rate of around 1.92% as an owner-occupier. That's under 2%. Every time the RBA hikes the rate, they are laughing all the way to the bank, quite literally, because they haven't paid an extra cent on their mortgage until the honeymoon ends, and it will go up with an almighty bang. They're looking at revert rates of around 7.18%. That's almost a quadrupling of their rate overnight. Their monthly repayments will go up by 65% on their biggest monthly bill typically. That's going to be a really difficult task for some people. We may find that some people just can't make it.
Okay, the message that I'm hearing from you, Sally, is that you can't be complacent. You really need to stay on top of your mortgage in this particular market.
Oh, absolutely. Whether you're on a fixed or variable rate, you do not need to take these rate hikes lying down. What is fantastic to see is that refinancing is at record highs at the moment, which means that people on a variable rate are going out there and doing something about it. They're switching to a lender to minimise the fallout from rising rates. If you're on a fixed rate, you can also start preparing for when you come off that, ultra low rate. Start shopping around at least 2 months in advance, and don't just take the bank's revert rate. They are typically hugely uncompetitive. At the very least, haggle with your lender for a rate reduction when you come off that fixed rate. But ideally, if you're looking for the biggest savings, you really need to go and refinance. The difference between a revert rate and what we expect the lowest rate will be in the market around that point is almost 2%. That could save thousands on your mortgage in a very short space of time.